Hey, today we're looking at Goodness Growth, and you're probably not going to believe me after the first half of this video, but I've actually invested a little bit of money in this one already. It'll seem a little bit crazy, but it is an interesting situation, and I'll show where it fits in on my tier list at the end of the video too. Now, like I said, I've already bought a little bit of the stock of this company. I've used Interactive Brokers to do that. There's a link in the description below for that. You can access over-the-counter products with Interactive Brokers, which is great for a lot of the cannabis stocks because most of them trade OTC. So if we were to look at their public dispensary locations and compare them to everybody else, Goodness Growth doesn't stand out. They've got 4 in New Mexico competing with Schway's, but Minnesota is going to be where I'm going to focus a fair bit of attention here. They've got 8 stores in Minnesota, with Green Thumb the only other company in Minnesota. Minnesota has gone adult legal as of in about, I think it's going to be about 12 months or 18 months time. I can't remember the exact date, what they said, but next year, essentially. And there's only 2 licenses in Minnesota, one for Green Thumb, one for Goodness Growth. So there's a bit of a duopoly happening in that particular state. They have some operations in Maryland and New York. They're loss producing and they're not very good, but the Minnesota license, I think, is really actually quite valuable, and their footprint that they already have there is very valuable. Let me go into it. Now, when we look at the numbers here, you're not going to be impressed. You're going to think I'm still crazy. So let me keep going. Gross margins at 48%, about the same as everybody else. Operating margins at just 2%, which is weaker than most. Their market cap's 21 million, so they're very small. Their price to sales is very low at 0.27. They don't have EBITDA, so their multiples get screwed up there. Why I think they're unique? Well, they've got access to Minnesota, which is one of only 2 licenses, plus what I'm going to explain later, this grown rogue partnership. I think that's going to be key to this thesis here. The debt to equity and debt to EBITDA is awful because equity and EBITDA numbers are messed up. Stock-based compensation at the moment is a bit high. Their salaries are also a little bit high. Insider ownership is it's okay. There's a bit of insider ownership. I think it's totally about 8 to 10%, something like that, which is okay. But I really like how their intangibles to assets are really low, 6%. So they haven't put big valuations on their licenses that they currently own, on brands that they currently have, anything like that. They're calling them practically nothing, which is good. I like seeing that. I think that means that their assets are about right. But still, it doesn't look good so far. Why would I invest any money into this? It looks kind of dangerous with the lack of earnings and all the debt. And if I'm going to be completely honest here, there is an element of speculation here, but I think things are actually turning around and the upside is big. And in my eyes, this has the most asymmetry in the space. Now we're going to have a look at their earnings presentation, and this is sort of the priorities that they're focusing on for 2023, which, look, all turnarounds say this type of stuff, but just bear with me here for a moment. So they're going to focus on cash and the ability to generate cash flow. They're going to get their balance sheet a fair bit more under control. They're calling it a transformational year for that. They really need to get a handle on their balance sheet, which they are doing by selling quite a substantial asset and in New York, and that should strengthen up the balance sheet quite nicely. They got here prudently deploy capital expenditures against higher returning projects. That's what we'd want to see from any business, but good that they're calling that out. And there's an ongoing litigation against Verano seeking significant damages. Let me explain this one a little bit. Verano were going to buy out Goodness Growth, and they had the deal in place. They'd announced it to the market. The numbers were in. It was going to be quite a valuable transaction for Goodness Growth. And then almost at the last minute, the deal fell through. We're not quite sure on the details why. Goodness Growth was shocked of this deal falling through. It doesn't seem to have too much rationale behind it, except something was going on at Verano, I think. And after looking at Verano, I don't think they're a great business. So I think there was some sort of issues going on in Verano. They might not have been able to pay for it. They might not have been able to integrate. They might have just seen that the industry was going down into a tough period coming up, and they might not have been able to handle the expansion, and they ended up pulling the pin, and the stock market for Goodness Growth got absolutely punished because of it. Essentially, they were left for dead. They thought that without the Verano money coming in, without the Verano deal, this was a worthless business. And the stock price has reflected this sentiment around the company and around that deal falling through. So Goodness Growth, because they had this deal in place and it was all signed, it was almost promised. There is some litigation that they're going to file against Verano, and they're going to hopefully get some pretty significant damages from it. Let's not use that as any sort of reason to invest or anything like that, but that's what this particular dot point is talking about when it says ongoing litigation against Verano. Yeah, if they get any money out of it, great. If they don't, fine. I just don't want them to be wasting money chasing damages, but yeah, there was a pretty interesting thing that happened in the space there. So if we're turning over to the operational side of things, they're going to try to improve their quality and efficiency and all these types of things. Now, let me go into a bit more detail about that too. So slide 5 of their presentation highlights their operational improvements that they've been focusing on. For example, one thing that they have been focusing on, well, overall, their total harvested pounds has been growing. That's great to see, but what I like to see even more is their percentage of A-grade flour. So it's the quality product that is going to warrant a significantly higher price to the rest of the rubbish that comes along with cannabis. A-grade flour is what's important, and they've been able to go from about 15%, pushing 19%. I think on the latest results, they're going to be into the 20s. They're targeting high 20s, and that would be quite a boon to the bottom line of the business if they can have a bigger percentage of A-grade flour. That's a tightening of operations, which I'll explain how they're doing that a bit later. Their total retail revenue has been growing, which is good to see. And yeah, this is a business that actually is performing. It is not falling apart, and they are making actual tangible changes to this business and the quality of this business. And I think things are only going to get better here. Now, the limited license state of Minnesota, the licenses that Goodness Growth have just become very valuable, considering that they're going to be adult use coming in about 12 to 18 months. And Maryland, which is one of the other states that they're in, have actually just gone adult use, which is of the 1st of July. So those numbers for the boost in the stores there are going to be shown in the Q3 2023 numbers, which we haven't been able to see yet. If you want more information on their balance sheet, slide 10 is where to go for that. And it's interesting that they even say the Verano decision to wrongfully terminate our transaction put us in a vulnerable position in a challenging capital markets environment. We have amended the terms of our credit facility and our senior secured lender to extend the maturity date into 2024. Essentially, what's happening here is the debt is expensive, and that is something that they've got to really focus down on. And this is where the bit of speculation comes in from my side, is I think they can fix this because they're selling a significant asset in New York, but this is the risk. Slide 11 actually goes into a little bit more detail. The principal amount of the Green Ivy credit facility is what they're calling it, is about $60 million worth. And as you can see, it's due in 2024. And that is the interest that they have to pay on that is their prime rate. So normal industry rates of I don't know what bank rates are at the moment, 6 or 7%. And then they've got to pay 10% above that monthly in cash. This is expensive debt. This is pushing 18, 20% credit card debt kind of style. So, and they've got to pay it monthly, which is just like a credit card. So essentially they're not in a strong balance sheet position at the moment. Yeah, it's a bit ugly on that side. If you are going through the document on slide 12 here, they actually break down the options and the warrants and the convertible notes to get you a really easy to find fully diluted shares outstanding number. That is quite convenient for me to do the calculations on. So I'm glad that they break this out. Now, something I did see that I like is that in their EBITDA, their adjusted EBITDA numbers, they're not adjusting out for stock-based comp. All the other MSOs, they adjust out stock-based comp, and I think stock-based comp is an expense and it shouldn't be adjusted out, but these guys aren't adjusting it out, which is good. I'm glad they're not doing that. Now, let's turn the corner here and why I think Goodness Growth is actually quite interesting. So, thing I like most about it is besides how cheap it is that they're partnering with Grown Rogue, another business. Grown Rogue is probably my favorite cannabis stock. Obi Strickler, the CEO of Grown Rogue, I think he's an amazing operator. And the partnership with Goodness Growth is going to be really good for Goodness Growth. It'll be great for Grown Rogue too, because the deal is structured so that it's a very fair win-win outcome for both parties. And they're combining, I think, amazing operations at Grown Rogue with some really great licenses that Goodness Growth have, and they actually have some good assets as well. I think the upside is quite interesting for both parties. See, Goodness Growth have had issues with quality control, that lower A grade flower that they're trying to get those percentages up. Grown Rogue has been able to come in, help with the growing operations, and they've already seen that it's improving their A grade flower percentage. It's jumped up to nearly 20% now. So the changes have already been implemented and the results are starting to show, and the turnaround I think is on. Consistency with the product quality is so important. I've said this in all the videos that I've made. If you're trying to create a brand, you have to be reliable, otherwise you are wasting your marketing spend and your effort. Imagine you're getting a beer, Heineken or Corona or something like that, and you have the beer and it's great, and you go to buy another beer and it's not as good. It's a bit off. And you just didn't know what you're going to get. Then there was a good one, then there was a bad one, then there was a couple of good ones in a row, then a bad one again. And if you didn't have consistency, you would lose your customer very quickly. You just wouldn't drink it. You wouldn't be buying it because you don't know what you're going to get. Grown Rogue has been able to come in and improve Goodness Growth's consistency. And Grown Rogue has also been able to drive costs lower as they have industry-leading lower costs. This is a great partnership for Goodness Growth, and I think they're going to see a lot more serious improvements. And honestly, I wouldn't be interested in this if this partnership wasn't there. One thing I really don't trust among the MSOs is their ability to be outstanding growers and drive costs lower. And I don't think many of the C-suite of these MSOs are expert farmers. They're generally going to be financial people. But Grown Rogue, well, they're different, and that's translating into Goodness Growth, and that's the thesis. Now, turning to management of Goodness Growth, well, the founder is still the chairman on the board. Josh Rosen is the CEO at the moment, and he said that there's a strong focus on fixing the balance sheet and improving with Grown Rogue. I like his humble realization that the business isn't in a good financial position, but the opportunity is there to fix the balance sheet, as I think the upside is very significant. They identified that too. I think I can see it. Now, let's talk about the value of their licenses. So the market cap, like I said, is around $20 million, depending on when you're looking at this. And that's for the Goodness Growth business, the whole thing. The debt makes the enterprise value actually far higher, but that might get taken down significantly with the sale of a non-core asset in New York. Green Thumb Industries paid $150 million a few years ago for the other Minnesota license. So let's even assume that Green Thumb overpaid quite substantially, and those licenses are really only worth $50 million, like a third of what they actually paid. Well, that is more than double the market cap of Goodness Growth, just of their Minnesota license alone. And I think the business today is worth around about that $50 million mark, just because that license has to be worth at least $50 million. Add that then with the improvements and the cash flow generation that I think they can be doing with the Grown Rogue partnership. They've got Maryland now also being fully adult use, and that's going to come through in the numbers in Q3 2023. And then you've got Minnesota going adult use in about 18 months' time, where Goodness Growth has one of just the two licenses. Okay, this next bit's going to sound a little ridiculous. I understand that. This might even sound a bit out of character, but I can see an easy path to a 10x here in quite a short period of time, 2-3 years maybe. Then if there's any of the other catalysts that can influence the cannabis industry, like the 280E rule change, the 280E tax system is essentially that cannabis companies are getting taxed on gross profit, not on net profit, and that's brutal for cash flow. Then you've got another catalyst called safe banking. So essentially that means customers can come in and use credit cards, and there's not as much cash needed on site and things like that. They can actually use the banks. And any other legalization throughout the country and federal legalization, all of these things, any of these things is... I think that's going to generate hype, and money can flood back into this space. And all of these things combined can... I've been reading Charlie Munger's book, The Poor Charlie's Almanac, and I just feel this Lollapalooza effect, if you're familiar. I think there's a lot of variables and a lot of things coming in together, a lot of hypey kind of things happening, and this could push things far, far higher than I'm even considering. Now, in true Charlie style, I have to think of how this is going to actually collapse and fall apart and invert that back and find out why it could have collapsed. So the risk is that the partnership with Grown Rogue doesn't work out, or they get into trouble with debt repayments and debt restructuring because there's even a more severe downturn in the cannabis market. I see these as quite low chances. I have factored them in. They have to be factored in. Grown Rogue partnership looks really solid. Now that they're in it, it's quite detrimental to pull out for Goodness Growth side. They've got Grown Rogue has a pretty tight contract there with them, so I don't feel like they're going to back out of that. They look like it's a perfect match anyway, but it could still happen. And a severe downturn in the cannabis market, that's a possibility, but is it going to get much darker than it has been? I don't know. Yeah, I think the risk is on the lower side for that too. I've really tried to think about that, but that's the future and I can't predict the future. So when I sit back and factor all these things together, I think the asymmetry of this investment is quite compelling. And something I'm going to try to do at some stage in the future is sit down and talk with the CEO and get a feel for culture, because I think that is going to be really critical to this investment as well. Okay, so where do I put Goodness Growth in my tier list? Now, I'm actually going to put them in the C tier. Maybe the bottom of the C tier, maybe they should be closer to the top of the C tier. Somewhere in the C tier, I haven't quite figured out where yet. The reason is just the ugly balance sheet, but the reason they're in the C tier, not the D tier, is because they have those valuable assets that I think are being considered worthless by the market. It is a turnaround, so there is some inherent risk there, but partnering with a company that I think is the best cultivator is going to really help them. I think they've actually got quite a strong thesis to actually pull off this turnaround. Grown Rogue, I think, gives them now a competitive advantage. And I think having just one of two licenses in Minnesota is a competitive advantage as well. Look, these things can change, but I like this more than most because I think they have some things that are actually really interesting compared to some of the other businesses here on this list. Hence why I was willing to make a small investment already, and I still have to talk to the CEO. I'll be honest, it is really small, like it is tiny, and I'm very okay with it going to zero, where it won't be a problem whatsoever. But I'm going to build some more conviction in this by talking to the CEO at some stage. Yep. And what else do I have to say here about this? Well, I think lastly, they could easily move up into the B tier, and potentially there's an opportunity for them to be in the A tier if they can actually pull this turnaround off. That's why I find this attractive, and it's cheap, and there's a lot of upside to this. The downside I understand, and yeah, this one's interesting to me. Before we go, I've got Grown Rogue and Glasshouse here on my list that I haven't actually put in the tier list. And as a little bit of a bonus, I'm going to place them right now in the tier list. You can go back and watch my videos on both Grown Rogue and Glasshouse. They're in two-part series for both of them, and you'll probably understand where I'm going to place these. I'm going to put Grown Rogue in the A tier. The only reason it could be high B tier, or maybe I'm going to put them high B tier. Okay, we'll put them high B tier. The reason it's not probably A tier, why I was a little bit hesitant, is because it's indoor grown cannabis, and I actually prefer Glasshouse's outdoor grown cannabis. And Glasshouse are probably not as good of an operation as Grown Rogue. I think I like Grown Rogue more, and I'm going to put Glasshouse right next to them in the B tier. But I think Glasshouse have the best product in the space. I think they have the best greenhouse in the space. I think they have such an opportunity in front of them that it is significantly better than all the other businesses. Grown Rogue being the only comparable at the moment. I like MariMed too, but yeah, upside wise, I like Goodness Growth. I like Glasshouse for big upside. I think best operators, probably Grown Rogue, MariMed, and yeah, essentially they're none of the big MSOs. And that's my findings. I hope you found that fascinating. Please ask me any questions you like in the comments, reach out about the cannabis space. I will probably do more videos on these in the future and follow these along. So there's going to be my channel's going to be pretty heavily focused on cannabis for a while into the future. So yeah, I hope you've enjoyed the little series. I will see you in the next video.